Hi there, welcome to Kneppy Invest, and welcome to 3 stocks on the ASX that release interesting or intriguing Appendix 4Cs or 5Bs for the June quarter 2025. I'm recording this video on the 7th of August, intending to release it towards the end of September or start of October. Now, very excited to do this particular video because the 3 companies I'll be featuring in this video I know very little about. Even though I have looked at these companies in the past, nothing really drew me in to have a closer look. And the 3 companies are Locate Technologies. However, they used to be called Zoom2U, and then they changed the name, maybe because of an acquisition. Then we'll have a look at QPM Energy, Queensland Pacific Metals. I have no idea. QPM. I'm pretty sure I've looked at this company in the past. And then we'll have a look at Curvebeam AI. And I'm pretty sure I might have had a very quick look at this company a few years ago, maybe when they listed. But this is like the first time I've ever had a close look at these 3 companies. And yeah, anyway, so what I'll do in this video is we'll have a look at what these companies do, and then we'll focus on the Appendix 4C and why I've included these companies in this series, then the cash receipts history, and then the chart. Okay, so now we'll start off with Locate Technologies. This is some sort of delivery company, like a platform or software for deliveries. I'm pretty sure that's what Zoom2 is, or Zoom2U used to be. Then they changed the name. I'm not sure if they changed the name because Zoom2U, the name didn't really connect with anyone, or maybe they made some acquisitions, but they do have 3 businesses. And those 3 businesses are Locate2U, which is a delivery and field service management software that allows you to track your workers, optimize your route, share your location, and manage your bookings. Zoom2U is a delivery platform that connects you with local independent couriers in your area for fast same-day delivery. So that is how I know this company. And there's another business which I found really intriguing, Shred2U. Do you need some documents that need to be shredded and you don't have the capability to do it yourself? Well, Shred2U may be for you, and I'm not joking. I'm not joking. They offer a range of services, including on-site and off-site shredding. There you go. Had no idea that sort of service is provided out there. I just thought everyone just did their shredding for themselves. Anyway, so yeah, I'm not going to say much about this company just based off what they do, but it hasn't really drawn me in all that much. So maybe the company's most recent Appendix 4C, maybe this can draw me in. They also released a presentation alongside this 4C. So let's open it up. And why I've included this company in this series. Obviously, they must have been operating cash flow positive. That's the only thing that makes sense for this company anyway. So let's have a look. And indeed, they were operating cash flow positive. Not a lot of receipts, $1.684 million of receipts, and operating cash flow positive, $160,000. Now, if you have a look at the year, receipts 6.7 million, so not a lot of business, and receipts don't look like they've grown all that much during the year, and they were operating cash flow negative by 169,000. So they're on that cusp. They're on that cusp. Now, one little problem is they do spend a little bit of money on intellectual property, which is sort of like capitalized research and development. Not a lot, $1.1 million for the year. So they are not free cash flow positive. Looks like they also spend a little bit of money on investments. So maybe that's one of the acquisitions they made and why they changed the name. They did a couple of raising, so they should have a little bit of cash on hand, $1.8 million of cash on hand, so not a lot, particularly if they start to burn through cash a little bit quicker than what they're doing now. They might need a couple of raising, and they do have a little bit of debt, $4 million of debt. Now, that might not mean a lot depending on the market cap of the company. So let's have a look at how high this market is valued. 19.52 million. So that sort of debt might be okay, but keep an eye on that debt, and we don't want to see that debt increase any further. Funny enough, on their market index homepage, they have the Zoom2U symbol or logo still there. So they must have recently changed the name. Yeah, formerly Zoom2U. Not sure when they changed the name. Must have been like 3 to 8 months ago. Because, yeah, I have no idea. You can always see, if you really, really want to know, you can always have a look. Go back. Here we go. So Z2U May, and then all of a sudden LOC in May. So sometime in May, they changed their name. So not that long ago. Okay, so not a big company, but operating cash flow positive, free cash flow negative, but not by a lot. So let's have a look at the cash receipts history. And this can be important because if I see cash receipts growing at a nice rate, then that could mean I take a closer look at the company. Now, cash receipts are climbing, but not that quickly. Not that quickly, to be honest with you. And this was not a record quarter, by the way. In fact, there were 1, 2, 3, 4 quarters that were better than this quarter in terms of receipts. So there is a chance, one of the reasons why this company is now operating cash flow positive when they may not have been in the past is because they have decreased their costs. Now, one thing I did not look at before was their commentary. So sometimes they will mention that one of the reasons why they might have had a better quarter is they've pared back their spending. They were EBITDA negative, by the way. I'm not seeing anything of note within. Well, they mentioned Bitcoin here. Purchase of Bitcoin. There we go. So this is also a Bitcoin company. They purchased 2.21 Bitcoin, and they currently hold 12.3 Bitcoin with a market value of 2.2 million. There you go. So I've learned something new about this particular company. Okay. Other than that, another way you can have a look at whether they're pared back spending is just have a look. By the way, here's a quarterly net cash flow from operating activities. So they were positive in the third quarter financial year 24. So the company has seen 3 positive operating cash flow quarters in the last 6 and 3 negative ones. So they are at that cusp. They are at that cusp. But I'd like to see a much nicer increase in cash receipts than what the company has been experiencing. Just looking at the spending, looks like they've actually increased. No, they've actually sort of increased their staff costs a little bit and maybe pared back in their product manufacturing and operating costs. Okay, now onto the chart for Locate. And one of the reasons why I knew this company had changed its name is because there was a fair bit of interest in Locate Technologies not that long ago. So May, just after they changed the name. So everyone went, oh, new company, they changed the name, let's start buying. So 30th of May, share price took off on that day, up 64.29%. I can't tell you why. Let's have a look. 30th of May, we'll go back 3 months. Is it 3 months ago? Yes. 30th of May. Oh, looks like they did a placement and a trading hold. So maybe that placement was a new acquisition. No idea. But anyway, the market liked it for some reason. And the share price took off. In fact, the share price went from like 7 cents all the way to a high of 28 cents and has pulled all the way back to 8.3 cents. So this is like a Matterhorn signal. And this is exactly what you don't want to see if you're a shareholder. Through this whole period, you've seen share price rise significantly and then drop significantly. And there you go. So share price back to where it started. And by the way, if you have a look at the weekly chart, it's been an ugly ride since they listed back in late 2021. Share price at 1.80 cents, now at 8.3. So share price has dropped 90% from when they listed. And this is still the chart of a company that is still pretty much a story stock. Not absolutely a story stock, but definitely the chart of a company going through a period where interest rates were rising that is not yet profitable and still not growing all that quickly. Okay, so Locate Technology is not really on my radar just yet. I need a little bit more proof that the company can grow and continue to grow. Now to QPM Energy, from waste to energy, powering a sustainable Queensland. So maybe the Q does stand for Queensland. I was thinking Queensland Pacific Metals or something like that. Queensland Pacified Materials, I don't know. I have a feeling this is about renewable energy, maybe. Focusing on the strategic capture and beneficial use of waste, coal, mine, gas. This results in a significant carbon abatement whilst providing Queensland with a reliable 24/7 source of energy. So, waste, coal, mine, gas. Interesting. Moranbah gas project. Production since 2006. So it's been a while. Stretching gas from coal seams. Acquired MGP in August 2023. What else do they have? Is that it? Businesses, Moranbah project, and geology reserves and resources. So it looks like that's all they have. The Moranbah gas project. Okay. Not the sort of company for me, in my opinion. That's just me. Maybe what they're doing is great, but not for me. So let's have a look at why I've included QPM in this particular video. I just want to see if they are Queensland something. I'm just going to have a quick look at their company profile. I just want to know if they were named anything else. What I might do is in Market Index, I might go back through some of their announcements. Okay, so I'm going on a tangent. Share price 3.2 cents. I'm pretty sure the share price was significantly higher than not that long ago. Okay, so let's have a look at their Appendix 5B. And we'll go past the commentary. And this is the 5B. Yeah, 5B. Receipts, 25.9 million, so a fair bit of receipts. Production, 20.6 million, so not a lot of margins within this company. But they were operating cash flow positive by 4.4 million. Now, one of the reasons why they're operating cash flow positive is because, by a significant amount, is because of government grants and tax incentives. Seems like they do get a fair bit. They also have an other, which was 1.7 million. I have no idea what other is. And I'm just going to see if they've mentioned it anywhere. I want to know what other is. That's fairly important, other. Fairly important because it's $1.6 million or $1.7 million for the quarter and $5.3 million for you. It's significant. Anyway, so the company was operating cash flow positive for the quarter and also for the year by fair amount, $35.6 million. But look at capital expenditure, $13.8 million for the quarter and $43.2 million for the year. So this company spends a fair bit of money on capital expenditure, which sort of makes sense what they do. So they are not free cash flow positive. The next thing I like to look at is any sort of, by the way, debt is increasing. Cash on hand, only $10 million of cash on hand. So there's a chance they might have to increase their borrowings or do a capital raising because looks like they're still burning through a fair bit of cash and debt. $60 million of debt. $60 million of debt. So you have to include that. And by the way, the market cap of this company, no idea. I'm going to say 60 million. 99.9 million. So they have an enterprise value of what was it, 150 million or something like that. 3 billion shares on issue. There you go. So $100 million company. Okay, so for me, I'm not that interested in this company because they're still burning through cash. Even though they're operating cash flow positive, they are free cash flow negative. Now, it's going to be a little more. It's going to be a little more complex than that. Now, there might be a reason why they are spending a lot of money in capital expenditure. Maybe they've got a new project near completion. They're spending a lot of money to get that to completion. And then after that's completed, maybe they won't be spending a lot of money on capital expenditure. So you do have to delve a little bit deeper into these sort of companies. But for me, it's a no-go. Now, let's have a look at their cash receipts history. Is this exciting or not? And what I want to see is cash receipts growing through time. I have a feeling no. Oh, that's the next company. Ooh, we don't have to go far from this one. Okay, so been tracking this company's receipts, and they must have put that Moranbah into production back in late 2023. Although it did say, or was that when they acquired it? That may have been when they acquired it because that Moranbah had been in production since, was it 2006 or something like that? So that must mean when they acquired it. And they had a really good quarter, the March quarter 2024, but since then receipts have been going down. So this is not exactly what I want to see. Now, only it's a small sample size, 8 quarters of history. So I think I'd like a little bit more history here, but not what I want to see when it comes to a company I might be thinking of buying for the longer term. Now onto the chart for QPM. I have a feeling share price of this company has pulled back a fair bit. So let's have a look-see. Oh, in fact, weekly chart, share price in 2021 was as high as 28 cents. So share price has pulled back 90%. But even if you have a look at the daily chart, share price did go on a bit of a run back late 2024, got to a high of about 8 cents and has more than halved since then. In fact, this daily chart is actually a pretty negative chart with a well-defined downtrend, short-term downtrend, but still it's a defined downtrend. So not the chart for me. So no interest in QPM Energy for me, but doesn't mean you can't like the company. You can do whatever you want. Now onto Curvebeam. I might have looked at this company once in the past, maybe once. Curvebeam AI, so they've got the AI in their name. That's exciting. Point of care medical imaging for orthopedics and bone health. So they must have some medical technology. So medical imaging, that's medical technology. Products, High-Rise. Oh, they've got a fair bit here. High-Rise lineup, PedCat Premium, PedCat, InReach, OzView, CubeView software. So also a software company, it looks like. So hardware and software combines market-leading point-of-care diagnostic cone beam CT imaging solutions with artificial intelligence and deep learning expertise to deliver solutions across orthopedics and bone health, fragility, fracture prevention. Formed in 2022, so fairly young business. Fairly young business. There you go. Okay, so we know what this company does now. Well, I'm sort of still up in the air, but let's have a look at why this company has suddenly got onto my radar. Curvebeam. They also released a presentation. I love it when companies release presentations. Yes, American companies, you should do it as well. They don't. Okay, so Curvebeam, their Appendix 4C, didn't really expect anything from this, and there is a reason behind that. And then I opened this up, the Appendix 4C, and I went, ooh, hello. Receipts, $5.6 million for the quarter. Operating cash flow positive, $402,000. Why is that significant? Look at the year to date. Only $12 million for the year, and operating cash flow negative by $11.4 million. So a few things going on here. First thing is they've really paid back product manufacturing and operating costs. $565,000 in this quarter, but $6.5 million for the year. So maybe they've just built up their inventory, and they have a lot of inventory, so they don't have to spend money on that, which could mean that in the future they don't have to spend more money on inventory. Staff costs probably around the same, haven't really increased or decreased that. Maybe a little bit of a decrease in admin and corporate costs, and maybe a slight decrease in research and development. So one of the reasons why this company is operating cash flow positive in this quarter is because of that decrease in product manufacturing and operating costs. In fact, I'd like to see that actually rising, which would mean they have to build up the inventory even more. So that could be not beneficial for the operating cash flow, but for the future of the company or the long term of the company could be good. Intellectual property, not a lot. So that's probably capitalized research and development, $232,000, but still free cash flow positive for the quarter. Cash in hand, $5 million, and no debt. Another thing I like to look at is some sort of mention in the commentary about how the company has performed for the quarter, half year, or full year. I like to see any sort of graphs. Here is purchase orders and US and rest of the world. So global company, you'd say there was one quarter, bad quarter there, the first quarter of last year. There we go. First quarter was a bad quarter. And then receipts or revenue went down, or purchase orders went down. Yeah, that's all I'm going to mention right now. They've got some definitions there. Oh, they also have an about section. Always look at the about section. Develops, manufactures, and sells specialized medical imaging. Yeah, we already knew that. Okay. So let's have a look at the cash receipts history for this company. And I know it's just across from QPM. There it is. Okay, so before this particular quarter, I had no interest in Curvebeam because there wasn't anything. Now, again, small sample size, only 8 quarters, but receipts weren't really growing. In fact, the most recent quarter was the second worst quarter in terms of receipts, but there was a bit of an uptrend there. And then all of a sudden, we've seen a big rise in receipts this quarter. Now, this could be one-off. This could be a one-off, and then receipts fall back to like 2 to 3 million in the next quarter. So that is something to be mindful of. Sometimes you'll see a spike in receipts, and then the next quarter, receipts drop. So I'd like to see a little bit more sample size of receipts growing at a nice rate for Curvebeam. Now, the other thing I should mention is the market cap of this company, which I forgot to do before. And the market cap of this company is 35.3 million. So not overly huge, only 321 million shares on issue. Okay, so let's have a look at the chart for Curvebeam. Anything to like here? I have no idea. No idea. This is a daily chart, and definitely see why this company has not come onto my radar in terms of charts, because share price has been in a downtrend since they listed, which was in the middle of 2023. Share price at that point was as high as 55 cents. So share price has fallen a fair bit. Now, just based off the daily chart, we have seen share price rally a little bit the last week and a bit from when I recorded this video, but not a lot of volume. I haven't seen much volume. So even though share price has rallied from about 7 cents up to 11 cents, it's a fairly weak rally because there's no volume. So I don't have much interest in this chart as well. Sort of like this other rally. There was a nice little rally in February. There was some bigger volume there, and then the share price just came back because it was a fairly weak rally. So no interest in this company either, or this chart either. Okay, so overall, not much interest in any of these 3 companies: Locate Technologies, QPM Energy, and Curvebeam AI. But just because I may not have interest doesn't mean you can't have interest, because one of the reasons I do this channel is just to share ideas with you. And these ideas could be companies I have no interest in. but it could generate a little bit of interest in you, and then you could do your own research. And that has happened in the past. That has happened in the past. Okay, if you have any questions, any thoughts, leave those in the comment section of this video. Otherwise, I'm not a financial advisor. If you need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.